Welcome to another video. If you're new to the channel, I'm a top author on the TRADINGVIEW platform as well as running an educational company and swing trading full-time with my students. In this video, we will be speaking about hidden levels in the market, hidden levels of supply and demand in the market that probably most of you are actually ignoring, but are very, very important levels in the market. So make sure you watch the video until the end because there is a lot of value to be taken from it. So without further ado, let's get straight in the video and provide this free value to all of you. Okay, so there are some very important levels of structure in the market that probably you have been ignoring. So let's speak about them. Now, for example, in this particular situation, it's clear that all of we see clear structure here, right? We have extremely strong support, turn resistance here. We all see this level, right? We all agree that here there is this strong level. We also see that the market has created this nice counter trend line. The market has already retested it. So it seems that everything is pushing to the downside, right? Well, it's actually wrong because what we have in this push to the downside, okay, is one candle that is not related to the move to the downside. These candles are extremely, extremely important because they are Sunday candles, and market makers will use these candles to actually manipulate the market. This is something that you will see over and over and over again, okay? Look at this move to the downside. There's one candle not related to the move, and it's this green candle here. And this is a very important structural level. Do not ignore these levels. The market loves to basically hit these levels, and they will act as extremely strong support or resistance depending if the market is coming from above or below. So do not ignore Sunday candles. And as you can see, basically in this particular scenario, the market respected this level as extremely strong support. Okay, the market went for a hit exactly of this area and then started a push to the upside. And this is perfect to manipulate the market. That is exactly what market makers use. Why? Because basically what do? They start the push to the downside, everybody starts to short, and they use all the money of basically retailers that are shorting to actually buy. So it's perfect for them. And this is not a case, okay? It happens over and over and over again. For example, you see all of this move to the downside. Now, after you see a big push to the downside like this, okay, what is the first thing that comes into mind? Okay, I want to see a deeper retracement, right? Perfect, I want to see a deeper retracement. Where is the structure? Now you see the market in this way, you say, okay, clear structure is here, right? We have this extremely strong support here. The market went here, found support, broke to the downside. We want to see the retest of this support, now turn resistance, and then possibly another push to the downside, right? That is the normal reasoning that everybody tells you to do. And it's right, but not in this kind of situations, not when you have one of these candles. Because what you have here is again another of those candles, and the market is exactly retesting it. So basically what it means is that the market has a very high probability of actually shifting away from this zone, okay, to find strong resistance here and basically make a move away from this area. Very high probabilities. And in fact, what you can see is that that is exactly what happens. The market shifts away from the area, okay, and creates a new lower low. Just a quick reminder, make sure you comment below and let me know which topics you would like me to cover in the next videos. So that is something you will see happening over and over again in the market. Look, I found another one here for you just to show you, because I want to show you in this video basically how these levels actually work in the market, because it's hard to spot them, okay? I mean, you have to really look, okay, there's one candle that is not related to an actual impulse. And when I speak about impulse, I speak about a level, basically a move in a market that is impulsive. So basically it is quite steep, okay? A steep increase or decrease of the price. But not only, I want to also see the market when it makes this strong increase or decrease in price. I also want to see the creation of a new higher high or a new lower low. So for example, in this case, what do I want to see? If I want to see a strong impulse to the upside, I want to see the market, for example, first create a high, and then the impulsive move has to break above this high, okay, by definition of an impulsive move. So strong move, and then obviously yeah, a retracement, and then I want to see another impulse to the upside. And the same things come for a push to the downside. I want to see a strong impulse to the downside, retracement, and then the next impulse is supposed to break below the previous structure, creating a new lower low. And as we said here, basically we want to see the market go and retest the level, previous support, turn resistance, or previous support, previous resistance turn support, or previous support turned resistance. Okay, that is what we expect. But as we have seen here, okay, if the market, in this case, what we have here, the technical previous support and resistance is here, but if there is a candle like this, that candle is supposed to stop the market. For example, in this case, if in this move to the upside here, there is one of those green candles, we don't expect this retracement to be all the way here. We expect this retracement to stop here and then start the next push to the downside. And this is something very, very important to understand. So for example, here again, we have the exact same situation. We have the level that we expect the market to go and hit. And we don't want to see, because here, for example, what do you see? Here you see an M formation, right? You see this M formation. So you want to see the market go and retest this level here. Why? Because this is the previous support, now turn resistance. However, in this push to the downside, the market created this candle here. And this candle here is the candle that the market is supposed to hit and then start a push to the downside. So we don't want to see the market anymore go all the way to that high. And that is why you're not supposed to be ignoring these candles, because these candles are very, very, very important. Look here. Perfectly tested and shifted away from the zone. Very important to say this. I probably found also more. Let me see basically what we have here. Yeah, for example, this one here, look what the market did here. For example, here, in this case, this is a more particular situation. Now, why this is a more particular situation? Because basically what we have is this candle is obviously lining up with structure. Okay, here you already have this previous support, now turn resistance here, but the concept is the same. We have one candle, the body of the candle will act as resistance, because in this push to the downside, there is one candle that is not related to the move to the downside, and that body of that candle is supposed to act as resistance. And as you can see, the market didn't stop here. The market stopped at the high of the body of the candle. And that is extremely, extremely important, because basically it shows us how market makers are actually using these candles to actually manipulate the market. So very, very key concept to keep in mind when you're actually trading. For example, exact same situation here, right? The market has created a nice impulse to the upside here and has created this candle here, the body of this candle. This is a strong structure area if the market will go and retest it. In fact, perfect retest and continuation to the upside. So these levels are extremely, extremely important in the market. And I don't want you guys to ignore this, because if you are, for example, looking for the market to make a deeper correction, like the example that we made before, but inside of that deeper correction, you realize that there is one of those candles, then you don't want to see that much of a deep retracement anymore. You want to see a retracement to that level, and then the market continue with the overall trend to the downside, start a new impulse to the downside, because you know that market makers have a very high probability of actually using those candles to basically fill in more orders. And the main reason for which those candles are created is because the market is interested in those levels. There are many orders at those levels. So even if the market is in an extremely strong downtrend, anyway, these orders will bring the creation of those candles. Then the market will break back to the downside. But when the market will retest this level, some of these orders will still be there because there wasn't the liquidity to actually fill them. So what will happen is that the market will continue to the downside with another impulse. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free analysis and education for all of you as well as going and checking out the mentorship program, because it's a very complete program. You first get all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how you're supposed to be approaching the market from a swing trading perspective by using multi-time frame analysis and order flow, and basically answering every question that you have each and every day, as well as having the possibility to take trades with me, because I give you, as I said, the new daily market breakdown each and every day, showing you how to apply the strategy that you have learned in live market situations. So without further ado, I invite you to go and check it out, or go and check out the next video.